Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. Financial markets experienced significant volatility following the US elections. So while the results are well known, former President Trump has been given a decisive victory. Markets had quite the reaction to this event. The dollar index rallied by 1.65%, comfortably trading above 105, while the euro fell 1.8%. Gold prices dropped by 3% yesterday, and the Indian rupee weakened, reaching as high as 84.28 against the dollar, closely following the moves in other Asian currencies. Good morning, JK. The markets have reacted strongly to the US elections. What are your thoughts post this event?
Good morning, Swaraj. Yes, Trump 2.0 is a reality. And, the victory was kind of, as against the close contest that was expected. It was a landslide, and market was not prepared for that. And what is more, it can well turn out to be a red sweep because while they have got the control of the Senate, even the House can go to the Republicans because they need to win 12 more seats, while Democrats have to win 33 more seats to get control. Now, what the market was prepared was a possibility that Trump can win, but not this kind of, landslide victory where they will have the control of both the houses, and the president, coming back is something that the market was not prepared. Therefore, it was a very clear direction for the market to buy the dollars, sell the bonds, and even buy the stocks, because his policies will also lead to the higher, stock markets, because tax cuts are also expected. What the market, in my view, what the voters had not contended was, while Trump's policies were well known, there could have been two opinions about it. But as far as the Harris contest was concerned, I think market was not clear on what her policies were going to be, and that probably swung the vote in favor of Trump. Now, what's ahead for us now? I think we have to look at. I would like to look at four areas. One is the Chinese angle. Obviously, everyone knows that he will be imposing additional tariffs on China, and in a way, China has been prepared for this outcome, and we know that some meetings have happened among the top Chinese officials to prepare for this, and possibly they will be coming out with another package of stimulus to stimulate the domestic economy. So in a way, they are prepared. The worst affected, in my view, is Eurozone, because apart from higher tariff that Eurozone can also face, the Ukraine war possibly will not get a funding from US, and if Europe has to protect itself from in the war effect, or to defend itself, it will have to spend on its own. And some estimates indicate that Europe will have to shell out another 200 billion if they have to foot the war bill. That is one thing. Secondly, Europe has its own political problems. There is a possibility that the German coalition may fall apart in the coming days. The finance minister of the coalition government was sacked yesterday. So there are many issues as far as Europe is concerned. Also, the fact that the Trump's coming back also gives some sort of a fillip to the right wing, and that right wing is actually gaining ground in Europe. So that actually is a kind of nationalist tendency rather than unification, etc. So there's a lot of challenge that the euro is facing. Therefore, and don't forget that while US rates, how much it will go higher now is become a question. In Europe, definitely rates are indicated below 2%. So in all the ways, Europe is at a dismal. Europe and euro are at a dismal. Now come to India. If there is a blanket tariff, India will also get affected. But what India can gain, one is a good relation, that the Indian leaders have with the Trump administration. And secondly, the Trump's policy of neglecting China, sidelining China would mean that a lot of investments can get diverted to India. So long-term investments I'm talking about, and that can actually work in favor of India. So you can see that these things have been actually reflected in the market as well. And finally, geopolitics. In terms of Ukraine war, possibly without much aid from US, possibly that war can slowly, grant halt or somewhat of a pause. But as far as Middle East is concerned, the increased sanctions against Iran by the Trump administration can actually lead to Iran taking a tougher stand against Israel as well, whom of course Trump will be supporting. So these are the impacts that I see as far as the change in the administration in US is concerned. Now, as far as the currencies are concerned, yes, euro took the biggest hit. Maybe more in store because of the problems that still look open for resolution. China yuan, we have seen trading above 7.20, and we already heard about the state-run banks in China defending the yuan above those levels. Of course, if there is a general rise in dollar further, it can go up further, but then the Chinese central bank has become vigilant. As far as the yen is concerned, the movement was driven by higher US yields, obviously. But once again, as we neared 155, we have heard official displeasure at the movement of the yen, and it's not ruled out that some sort of action can come about there. As far as the Indian rupee is concerned, I would say the reaction was much more muted if you compare with the dollar's rally against the euro, or even Mexican peso, which weakened nearly 3.5%, and then Chinese yuan, which has weakened about 1.5% recently. Most of the Asian currencies were weaker by more than 1% against the dollar. So compared to that, rupee has had a muted reaction. It's not just the fundamentals which I explained above, but it's also the central bank which has been keeping a vigil on the currency movement. And while we have seen a fall of nearly 30 paisa from the lows that from 84 break that we have seen last month, it's still been a very measured move that the central bank has managed to contain with along with their intervention efforts. And I think this is very likely to continue going forward. I think we have the FOMC meeting. The guesses from FOMC will be as much as I and you can do about what the policies are going to contained and how it's going to pan out on inflation and rates. Therefore, while today's decision will be for a quarter plus point cut, they will be guarded about forward guidance as far as the rates are concerned. So I think FOMC may be much of a much less exciting than earlier, because the change in guard at US government has actually overshadowed everything else. So rupee, I don't think too much of weakness immediately. Maybe 30 will be resisted for some more time. But just to highlight that still the flows are against the rupee. FIs have still been selling the stocks, and that is creating higher demand for the dollar. So central bank will have more work to do if they want to contain further weakness in the rupee. Overall, I think markets got a clear direction which way to go after being in a tight range for some days, and possibly this can have some more distance, but a time will come for reassessment whether the market has overdone, because two factors we should remember. The tax cuts will not happen immediately. Trump takes office only in January, and the budget will come up only later in the year. Also, history shows that tariffs imposed on China last time was not really leading into a big rise in the inflation. So it's a lot of things have been priced in now, and we have to wait really what the reality comes about. And I think that's where the market interest lies. Thank you.
Thank you, JK. And just quickly summarizing for Trump 2.0, while Senate and the presidential elections have been won by the Republicans, a trifecta would be the Republicans winning even the House. We'll get to know that also soon. Now, the areas to look forward to would be the Chinese relations and the tariffs, relation with the Eurozone, and of course, geopolitically, the entire Ukraine situation, since funding might dry up from the US. The Eurozone has its own problems. Coalition government in Germany seems to be very weak and may be out of government soon. And of course, the inflation and monetary policy, the direction that might take. For India, while it may be affected by any blanket tariffs, relations are expected to be better with Mr. Trump. For currencies, euro took the biggest hit. Chinese yuan was quite weak, trading close to 7.20 against the dollar. Reaction of the rupee was much more muted as compared to these moves yesterday. And the event to look forward to now would be the FOMC meeting. Favored outcome is for a 25 basis cut, but it may be less exciting due to the change in government that has taken place. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.